Paul, hearty congratulations on winning the Refinitiv Lipper Award for the Greater China category over 3 years. Were you surprised by this award?
Well, I like to say that I'm surprised, but actually I'm not, because this is actually 3 years in the making already. Now, the fund itself has been in the market for more than 10 years, as you know. But in the last 3 years, we've done something different. We've added this AI, machine learning investment process to work with our human analysts to produce some of this industry-leading performance. So we started this initiative about 3 years ago, and we are very happy that the Lipper Awards has put this stamp of approval on the whole process.
That's great, Paul. So can you share a little bit more about what was behind the success of this fund?
What the AI ML model does is that it helps our analysts to make more objective and a better investment decision all around. And how it does that is, first, it really covers the entire investment universe. Now, in our case, it could probably add up to probably around 10,000 companies, which, as you know, it's almost humanly impossible for a small group of analysts to really thoroughly cover. But with the model, we're able to take into account all the fundamental factors, macro factors, technical factors of every single stock. So we analyze it rigorously, and then we come up with a short list of stocks where then the analysts can focus on to do a greater and more in-depth due diligence. And that's how we're able to, first of all, uncover all the potential opportunities out there, which we previously couldn't because there was a shortage of manpower resources. Or maybe it's just because humans are just biased in a certain way, and we choose not to cover certain sectors where the opportunities might come from, right? So in that way, we have a more thorough coverage and more unbiased coverage, and that's why we are able to generate better performance over the longer term.
So what is our outlook on the Greater China markets?
I think that there are two parts to it. So our longer term outlook for China is actually quite positive, because we see that there are many opportunities over the long term in China. For instance, I think we've talked in the past about potential for an upgrade in consumption in China. So that theme plays out over the longer term. And then also the rise of advanced manufacturing capabilities in China. So that presents a lot of opportunities as well. For instance, the sunrise industries like green energy, where China is dominant. So let's say, for instance, this year, you might know that China is going to install 3 times more solar panels than it did last year. So this is a huge growth opportunity, right? And then, of course, the other one that people talk about is EV. Now, of course, despite all the short-term noise about the EV sales in China slowing, in fact, this year, they look set to be doubling from last year in terms of EV sales in China. So that's another huge growth industry. And these are not the only industries that are growing so rapidly. And as you know, I think the mass market, the semiconductor industry, will also receive a lot of funding and attention from the Chinese government. And we're going to see, again, very, very high growth rates in the next couple of years as they strive for self-dependency, right? So we've talked about all these opportunities in the long term, and that's why we remain very positive, despite some of these short-term noises that we're hearing. And then, of course, in markets like Taiwan, we're also very selectively positive on the tech industry. So Taiwan is more on the high-end technology industry, semiconductor industry, and that complements China's dominance in the mid-low end, right? So, for instance, in Taiwan, I think the theme right now is AI, and I think potentially they could be Asia's largest beneficiary of this new AI trend that we're seeing around the world. And when it comes to Hong Kong, I think we're a bit more neutral, but there as well, I think over the long term, I think Hong Kong can become a hub for tourism, leisure, F&B, retail. In the long term, that could also be a potentially beneficiary for Hong Kong.
So how would you say the machine has guided you that is different from your peers in the market? How is the machine different from consensus?
The model has been underweight China this year, and we have been overweight Taiwan, especially in the technology sector, and neutral in Hong Kong. And so that gives us a kind of ability to maneuver in the short term, timing our entries and exits some of these markets. And obviously, I think year to date, the fund has performed very well. So I think that again kind of validates this approach and the model's call this year. In fact, the whole beginning of this year, where we've been underweight China and overweighting Taiwan, and that's worked out, as you know, really well.
Paul, a lot of investors are a bit reticent about the China market right now. They're worried about economic growth, and the market hasn't done so well year to date. What is your advice for investors with regards to Greater China?
I would say there definitely are risks in the investing in the Greater China area right now. So let's talk about the risks first, right? So the most obvious one would be the geopolitical risk. So I think every investor ought to be cognizant of that. Then of course, investing in individual sectors, there are obviously risk involved. For instance, the real estate sector, the financial sector. These are some sectors that people are worried about potential negative growth, and maybe at this point, maybe even for some consumption segments where it's kind of suffering from slower consumer demand. So I think investors need to be aware of the risk, but at the same time, we've spoken about the long-term opportunities, and I think by focusing on some of these high growth industry, I think investors are still able to make good money over the long term and over the short term.
Paul, thank you so much for joining us today. Thank you, Paul.
Thank you.